Traders at Axis Bank say investors continue to cherry-pick mid-dated bonds, especially the May 2023 paper. Meanwhile, minimal interest is seen on the long end of the T-Bills and OMO curves. Chukwunonso Ifejiofor, Treasury member at Axis Bank, joins me now for more market movements. Nonso, thanks a lot for your time on the show today. We're resuming from the holiday yesterday, marking Nigeria's Independence Day. Walk us through some of the recent movements we've seen so far this week. Let's start with liquidity levels.
Okay, thank you, David, for having me. We saw market liquidity open at a position of 709 billion at the start of the week. That was an increase of about 78 billion from where it had closed as Friday levels. Consequently, as a result of this increase in markets, we saw the OPI and overnight rates decline by 130 basis points and 140 basis points respectively, to close at 28.03% and 28.74%. We expect similar trends to continue today if barring any significant funding activity.
Sure. And a part of the expectation as well is the intervention of the Central Bank of Nigeria as well now to remain active in the FX market to help improve the sort of movements we have seen so far. But walk us through what's playing out as well now, how the Naira is trading against the greenback.
Okay, as at Monday, we had seen the NAFES depreciate by 4 Naira to close at 1,673 Naira. Midway through this trading session, we saw the CBN come into the markets to intervene, where they sold roughly about $40 or $50 million to our market participants. Nevertheless, we saw the NAFEM rates decline by 1 Naira to close at 1,543 Naira. It feels like some of the interventions that we have seen so far has not really had that much of an impact. But we know that some of the issues surrounding this is because of the increased demand as we are looking at the youth side, where suppliers are trying to stock up for the celebration season and also stock up for the end of year sales. However, what we see is that what we perceive is that if the CBN continues in the market as they have done before now, we should begin to see that effect trickle in and then see an appreciation in the Naira.
Yeah. Okay, now let's talk about activities within the T-bills and then the bond side of things. Now, we're seeing market players largely on the sidelines. Walk us through interest levels and at what levels we're seeing trades being consummated. Okay,
thank you. If you recall, last week, the Apex Bank had increased the MPR rates to 27.25%. And since after that activity, we had seen we saw two OMO auctions that last week, which printed at about 24%. We have seen a bearish trend in the market, players sitting down, players maintaining or sitting at the sidelines, taking a cautious approach even as they watch out for what seems to be the hawkish stand of the Apex Bank. We've seen the OMO trade at around the 1-year OMO bill trade at around 23%, while the NCB bill has traded at the 1-year NCB bill has traded at 19.5%. In the bond space, the 2031 and 2033, which closed at 19.99% and 20.05% respectively, at the auction had inched up by around 100 basis points, trading around the 21% handle. What we saw too was at the end of the trading session as at Monday was a 5 basis point decline across the benchmark yield. For the T-bill curve, what we saw was a 3 basis point increase. Our expectation is that this bearish position will continue, even as market participants take a cautious approach not to be burnt, even as they plan to make quick earnings and cherry-pick high-yielding securities. Thank you.
Well, we'll have to leave the conversation here for now, Chukwunonso. Thanks a lot for your time on the show today. That was Chukwunonso Ifejiofor, Treasury member at Axis Bank.